Welcome to another video by the Market Maker SA. I hope you guys are doing good. It's been a while since we've dropped a video, but yeah, I hope you guys are doing good. I hope you guys are trading strong. Before continuing, don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. Before continuing this video is sponsored today by FXIFY. So FXIFY are one of the best leading prop trading firms out there, and of course, what is a prop firm? Well, a prop firm is a company that gives you funds to trade for people, of course, like us who do not have them large amounts of monies to trade. They offer funds for us to use. Now, of course, how it works is you have, once you've purchased the challenges, or when you've purchased a funded account, there's certain amount of rules and regulations that you have to pass before you can get the funded account. Now, of course, the issue with funded accounts is that there's a lot of them out there that are very not trustworthy. But of course, for us, we use FXIFY. They're very good, and they're quite affordable. You can see right now the 5k ranges from $59 for 5,000. You can see it's a two-step. As you can see, it's for beginners. It's a two-step for $59, and the targets are quite simple. $500 profit target for the first one. And of course, the daily limit is 4%. So that means for 5k, you basically trying to lose about, you're trying to avoid losing about $200 per day. And yeah, everything is quite good. And as you can see right now, the phase 2 is a bit it's a bit simpler. The profit targets are a bit simple, and the daily loss is still the same. Then you can see the funded account, the daily limit is still the same, and everything is still the same, but however, there's no profit target. That's when you start getting your payouts. So FXIFY, they're very good. We use them ourselves. They're very reliable, and yeah, they're very good. They're very professional, and I think you should definitely check them out. If you are interested in buying one, use our link down below. Use our link down below to get a discount. Of course, using our link, and yeah, definitely check them out. Okay, let's begin the video. So today we'll be looking at today we'll be starting our road to funded series. So basically, in this series, we purchased a 5,000 funded account. We purchased a 5,000 funded account, and in this series, we'll be documenting and going through our road to passing the challenge phase. So without further ado, let us begin. So obviously, we purchased the $5,000 one, of course, to start off. The road to funded account, and of course, the main purpose of this is to try pass the challenge phase, so we can get granted the actual account. So obviously, how this is gonna work is we're gonna document the trades that we took during the week, and at the end of the week, we will drop a video and we'll go through the trades that we went through. So this challenge was bought on Thursday or Wednesday, between those two, and so far we didn't take a lot of trades, but yeah, we're gonna go through those trades that we've taken so far and how far we are from completing the challenge phase. So yeah, so obviously, in terms of let me try find it. In terms of the trade that we took, it was a bit of it wasn't a bad week, but it wasn't a good week as well. It was a bit in the middle in terms of what we were looking for. So basically, what happened is we started off, as you can see right there. There it is, right there. $5,000 account right there was made on the 4th, and as you can see right now, at the moment, it wasn't a good week. But it wasn't a bad week where we completely lost the account. No. So obviously, how we are approaching this account is that we're going to be using 1:3. We're going to be using a 1:3 risk management ratio. So in this instance, we're going to be risking $35 per trade. We're going to be risking $35 per trade to try and make $105 each trade. So obviously, in that instance, that will then obviously the first profit target for this account is $400, and then the second one is another $400, but we're getting more into that. The daily limit of this account is $200. Well, $200. The daily limit is $200. So that means in a day we cannot, if we lose more than $200 in a day, we have officially lost the account. And then obviously our max drawdown, that means the amount of money that we are allowed to lose in this whole entire account is $400. So as you can see, we took 4 trades. We took German 30, we took Euro USD, we took and then we took 3 USD CHF trades, and we're gonna go through each of them and what exactly happened. So obviously in this instance we see what's very nice about our risk management is that even if you win 1 trade and you lose 4, or if you lose 3, your P&L won't be hitting that much because you're following your rules. So as you can see, in this instance we're aiming for about 105 in this trade, and we had to take 54 because we were trading, we were holding 2 positions at the same time, and the other one was going in red, and we had to leave. So as you can see, in this instance we followed our risk management. $31, $18, $25, all below our risk management, and obviously all below our risk management target. And obviously we won 1 that was above our risk management target but didn't reach our profit target. So in this instance we couldn't make a profit for this week. So obviously in this instance I was very disappointed, but there's nothing I could have done about it. You know, it happens in the market. Losses will come in the market, you know, it's just how it is. You know, in trading is not a 100% game. It's just how it is. So yeah, so okay, let's start with Euro USD. So obviously what happened with Euro USD was very nice. We went into the market in the morning and we identified instantly that we were in a peak formation high. This all happened right here. We're in a peak formation high. We identified the peak formation high. The day before, on Thursday, we had marked this area and we expected the market to come back into that area. Of course, that area as well being backed up by a mitigation block on the H1. You can see, right, not even a mitigation block down there, of course, but more specifically this up candle order block right there. So waiting for market to come in there, and obviously in the morning market was in there and the market was ready to move. All we had to do was take the trade, and as you can see, we took the trade. Let me try and find it. Is this the one? I don't think so, but we took the trade right there on top, if I'm not mistaken. These are all, there it is right there, I think. No, this is the German 30 one. Excuse me guys. Okay, there it is. As you can see, we took the trade right there. Very nice stuff. We took it right there on top. We had to wait for market to close below that 13 EMA. So of course we entered the market with the market already closing below that 13 EMA. So that was very nice for us when we were targeting those downward areas right there, which would have bagged us about $91. So as you can see, market actually hit our target. So that was our first successful trade. Something very simple, something very nice. So obviously if we'd taken this one only, we would have been fine for the week. We would have been in profit. So our target was hit. Very nice trade. As you can see, market is continuing down, but I told myself it's fine for the day, you know, we'll continue next week. And then obviously the other trade that we took this I'm looking at the significant trades, you know. We took this USD CHF trade. Now this is where our blunders, this is where the blunder actually happened. Well, not really a blunder, as the trade was actually very good, but obviously we got taken out. No, not necessarily we got taken out, but we had to leave the trade. We had to leave the trade as it was a bit pointless. And you can see market is not really trading into the position, not necessarily. So as you can see right now, let me just move out, go to my M15 going down, because that's where our bias for this trade was. And you can see right there it was an awful trade. I'm not very happy and impressed about this one, but we did it, and now we have to own up to it. It's very simple, we have to own up to it. So what happened, obviously I entered the market, saw this beautiful anchor formation down there. Oh, not beautiful because you can see what happened after, but I saw that very nicely, and what gave me even more confidence about it was that it had this on the not even on the H1, on the M15. Let me just go there. On the M15, it was coupled with this fair value gap right here. So this is what I like. I like the fair value gap. I like the break of structure as well. And I was like, okay, this is a good trade. I'm definitely gonna take this, because the break of structure obviously indicated market going into a mitigation block as well. And then see with the way market collected stops right there, I was very happy. I was like, you know what, this is a good trade, and we're taking it. So we took the trade. We took the trade right there, as you can see with that previous screenshot that we showed there. We took the trade right there. Oh, this was okay, this was Euro USD. Let me just find it. There we go. We took the trade right there. We had to wait for a bit of confirmation. I mean, I didn't like it as well because we were a bit late, but I was waiting. The close gave it even more confidence that I should take it, especially with market going into my area. And obviously, you see our stop loss was down there. That being, we didn't even risk 35 in this one. We risked 31. So, and as you can see, what happened here is then market then I went into our direction. We're in blue. We're in profit. Our take profit was somewhere there on top. And as you can see what market did here, market then came back down into this other fair value gap. So I decided to add on to my position right there because of that fair value gap. I decided, okay, there's a fair value gap, let me add on to my position. So I put in another 0.15. And then as you can see right there, we're in money. And then we got taken out. And specifically when we got taken out here, that is when I decided to leave the trade. And as you can see, market didn't come to our stop loss, but I decided to leave the trade as I just didn't like how it was shaping from that point on. I felt like it was a bad trade that we took because our stop loss was down there. And as you can see, the market went down, took out that area, and then continued to our right direction. So we could have broken even if we stayed longer, but it's not about that. And then of course I kind of got hit by psychology there. Not necessarily, we had to wait for a better entry, and we thought we found it because the market broke those structures, and the market came back to this fair value gap. We entered again, we were in money, but we got taken out. So yeah, those are the trades that we took right now. As a result of those trades, we lost the trade. As you can see, we lost the initial trade, and then we lost the add-on trades because we added on that favorite game and that favorite gap. So it was just a bad day. But because we followed our risk management and we didn't over leverage or we didn't hold the trade for long, we ended up the day with a negative $17 on the 5k. So currently we're in a negative balance, but we're looking to change that next week. We're done for the day. As you can see, there was a lot of trade opportunities that we could have taken. We could have stocked this and cut it down there, but I was like, you know what, it's fine. I don't want to overtrade. I don't want to do a lot. I'm gonna take my L, I'm gonna accept it, and it is what it is. I'm gonna take my trade, I'm gonna take my L, I'm gonna accept it, and I'm gonna move on. As you can see right there, we could have taken Euro USD or something that I was looking to take back, but I decided no. Especially when I found out when I found out that it was a NFP day today, I decided as well not to trade. So as well, it's fine. We take the L, negative 17. It's fine. So yeah, the road to funded hasn't started off nicely, but we are there, and it's part of the game. So as you can see, at this point, our profit target is gonna be $400. So we're aiming to make $400 to pass phase 1. Then obviously phase 2 is usually $300, so it'll be less. And obviously that's our profit target. Our daily limit is $200. So we didn't even lose that. We kept our risk very, 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 very. I like the way we managed our risk, even though we had a losing day. We managed our risk very nicely. We weren't trying to do anything crazy. We know what we're doing. And then obviously our profit target, our maximum drawdown is another $400. So that means if we lose $200 in a day, the account is gone. If we lose our $400 in total, if all of our losses total up to $400, the account is gone. So yeah, it is what it is. Started off the challenge bad, but we'll be fine. Yeah, as you can see, I feel devastated for starting this challenge bad, but it's fine. It's not a problem. We move. So yeah, guys, thank you guys for watching. Don't forget to like, comment, and subscribe. Don't forget to hit that notification bell icon to be notified in case we drop another video. We're definitely gonna drop more videos, same time, same place next week, as we will be going through the trades that we took in the challenge that we had.